Candlestick anatomy. Yeah. So this is basically what the candles represent in the market, right? In the market. Um, let me see. Let me use ADJPY for instance, or let's say Euro USD. So, all right, you have the okay. Well, every candle that opens in the market here symbolizes something, right? Every candle that opens symbolizes something. Okay. They are simply the graphical representation of market movements, right? And how they open tell us a whole lot, right? How they open tell us a whole lot. Let's say, for instance, Euro USD, right? This is just simply a tug of war between the dollar and the pound, right? So at every point in time, one of these currencies are gaining, one of these currencies is gaining, over the other, right? So if you're seeing a consistent upward trend on the euro is gaining against the dollar. And if you're seeing a consistent, just like the NFP on Friday, right? Dollar gained massively. That's why you saw massive sell movements on currency that trade against the dollar. If you check USD JPY, you're gonna see a massive pump, right? On Friday. No, there was a yeah, this is a nine this is the pump, right? The 130 pump, the 130 NFP news volatility. And that has been like that for the longest time, for the longest time, right? So you're looking for you're looking for buys. So basically USDJPY moves against um gold, right? Or other currencies. Yeah. So talking about profit and loss now, of course, basically, if you are to if you're analyzing and you're like, you know what? In fact, let's look at the dollar index even. Let's use the dollar index as our so of course this is the NFP, right? You can see dollar moved from 9921 something to like over 100 points, right? Over 100 19, that's the price, went from 99 point something to 100. This is a massive gain for the dollars, right? And for a while, it's been, you know, giving us on the 15 minutes, it's giving us a low-key downward movement, right? As you can see, it's been giving us low-key downward um movement, right? So low-key, someone might be expecting for it to still sell, right? So that's what I'm looking at here. For it to still sell, right? It's pushing up a little bit, just at a point here to continue the sell movement. So if you check out other if you look at USDJPY, you're gonna see something similar as well, right? So let's say for USDJPY, we are seeing something similar, low key, low key similar on gold. Let's say I'm waiting for the market to pull back to a particular price for it to sell. Let's say this is a sell moving. Let's say I'm waiting for the market to pull back into this area. Well, this is an area of interest for me. All right, so I have my SL somewhere. Then you push. Now you analyze and you're aiming for a sell movement, right? The market is meant to drop, right? And this drop here is actually profit for you. This particular movement here is 14 points, right? 14 points or 14 pips, right? 14 points or 14 pips. And it's also something, right? So if you take a sell here, you're making profits. There are some instances where you take a sell and you're losing, right? There are instances where you take a sell, you lose. That's as clear as it is. So if you take a sell in an uptrend market, just like we have right here, this is an uptrend, and you're taking a sell in an uptrend, of course, it's gonna mess you up. So one of the best things you can do for yourself here is to understand the trend of the market. Well, we'll get into that details over time, right? But for the meantime, understanding the direction and where the market is going is a whole lot. And now another challenging thing is entry. Apart from entries here, your stop loss and your take profits. Now let's say I trade up accounts majorly, right? So I always tend to risk just 1% of my account. And with that 1%, I know the amount of pips I can endure, right? To have to risk just 1%, right? So let's say you have, for instance, you have a okay, let's say you have a normal funded account here. Let's say you funded like $100. I want to be risking 5%. 5% is basically $5, right? So, let's say for every um let's say one lot size gives you okay, let's say you want to take a cell right here. Let's say you are splitting this cell here, right? Of course, you are setting your SL above this high here so you don't get taken out. And that will be giving you a maximum of let's say 7.7 pips, right? 7 pips. And you are doing 1:2. So you are risking 7 pips for this low here for 14 points, right? So 7 for 14. So this is exactly whatever you're risking, you are aiming to make times two of it. All right. So let's say you have $100 account, you only want to risk $5, right? So and this is 7 points. So if, for instance, one lot on USDJPY gives you $7, right? I think that's what it is. One standard lot on USDJPY would actually give you $7. So what you're gonna do is like to reduce it to like 0.8, right? To make sure that these 7 points will exactly equate $5, right? So in my case, let's say I trade, like I said, I trade a proper account. Let's say you have a 5K account, right? And you want to risk just $50, right? In this case, you now have to know that, okay, to risk $50 on a seven pips stop loss move, you need to do some calculation, right? First of all, 7 times 7 is already 49, right? You can decide to enter with 7 standard lots to risk $49. That's almost 1%. Aiming to make almost 140, aiming to make almost $100 on the move, right? So these are the calculations you do, right? To make sure you are in the clear because having the precise what's it called? Having the precise TP is very, 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 very important, right? So over time, you might decide to start risking 1:3, right? So meaning that whatever you are risking, you're looking to make times three of it. Whatever you're risking, looking to make times three. So for every 7 pips you're risking, you're looking to make 21 pips. For every $50 you're risking, you're aiming to make $21. Sorry, you're aiming to make $150 from it. From every $5 you're risking, you're aiming to make $15. That means for every 5% you're risking on your account, on your live account, you're aiming to make 15% from it. Right? So that's very, very, that's just what it is. And if you look at it, this is actually a good point for this market to sell to, right? If we look at DXY, you see it has a strong potential of actually selling, right? It has a strong potential of actually selling. So that is what it is. That's the same thing we are seeing on gold as well. We are looking for a pullback first, right? So we're expecting a pullback, just like USD JPY. We're expecting the market to pull back into this area to now sell. That's what I'm looking at on gold. I expect the market to pull back into a particular area before selling, right? So that's actually how to go about all of these um the candlestick anatomy. Now to break it down, right? The kind of candles you see at a particular um aspect of the market matters a whole lot, right? Matters a whole lot. Now, let's say we have several what's it called? We have several candlestick patterns, right? We have several candlestick patterns. That's why I always recommend Candlestick Bible, right? Yeah, that's the book I read and it actually made me understand candlesticks better and the patterns, the meanings, and how to navigate them when they appear at critical points of the market, right? Critical points of the market. Um, from the basic of the basic here, we have there are some candles you see. You see that this is a clear rejection candle, right? You know that is a clear rejection candle. Just like I'm trying to see these ones we have here. Then if I can see something interesting. But I'm not seeing any interesting thing yet. We have the dojis here. Dojis, we have this one. This one here, when this particular one appears, when this particular one appears at a resistance level, this is what's it called? This is gravestone doge, right? Yeah, gravestone doge. The analogy there or the what it means is simply that okay, buyers, because if you look at it, there is no wick below, right? Buyers went in with full momentum, right? But ended up um losing the fight. Sellers won. Now, if I decide to check the full length of this thing, you're gonna see that it closed below the 50% of this whole gap. Let's check it out so you see. That's why I say Clifton Doji. Yep. All right. So you can see the 50% of it closed below 50%. This signals, okay, that sellers actually trying to enter this market, right? So it's essential to know what to do, right? So with this, what you're gonna wait for next is a clear confirmation, right? And what happened there? You can call this a bearish engulfing candle. Yeah, it's engulfed the body. This red candle engulfed the whole body, and the wicks also covered the whole part as well, right? See right here, it covered everything. So this is already your confirmation for a sell, right? Of course, you can wait for more confirmation, allowing the um, sellers to come up. So you can use this very point here as a strong resistance point, right? And just have your entry right here and you sell. Or you can simply sell at the close of this very candle. You're still good. have your SL above here. Then aim for whatever you want to aim. All right. So all these things make sense if they appear at an area of interest within a resistance zone, right? Within a support zone, the case is still different, right? So that's is what it is about that actually, right? That's what it is about that, right? So we'll still keep looking at it, right? So I think I am done with this candle analogy thing. And also that's what's helping me in I think I am so that is it about it basically, right? So um let me